Money is no longer what we knew it to be. Who will control it in 2030? Central banks or artificial intelligence? Today, 92% of the world's circulating money is no longer physical. It's digital, invisible, moving in seconds through networks that never sleep. And in that arena, AI is bursting in with a force that surpasses even governments. To put it in perspective, while the Federal Reserve moves trillions with monetary policies every year, a single algorithm can process more transactions in 1 second than the entire New York Stock Exchange in a full day. We're not talking about science fiction. We're talking about a silent battle that will determine who decides the value of your salary, your mortgage, your future. The question is inevitable. Will we continue to trust central banks, or will artificial intelligence have the last word? The new power of the algorithm. Imagine a system capable of reading the financial movements of 8 billion people in real time. That's what the most advanced AI models can already do today. In 2023, a European bank tested an AI that analyzed 10 million daily operations in less than 3 seconds. 3 seconds. What used to take weeks to audit. But it's not just speed. It's accuracy. An AI can detect inflation patterns before traditional economists even suspect them. It can foresee liquidity crises with a 95% accuracy rate. While a monetary committee debates for months, an algorithm delivers the answer in real time. Example: in China, the People's Bank is already testing AI systems to monitor the digital yuan. In the United States, the Federal Reserve collaborates with universities to design models that anticipate recessions. But here's the twist. Private companies, from Wall Street to Silicon Valley, already have algorithms that surpass the capacity of the central banks themselves. Who inspires more confidence? A board of governors that meets quarterly? Or a neural network that learns every second from every economic movement on the planet? And therein lies the tension. Because the future of money won't just be a topic for banks, but for code. The big question that arises is brutal. If money is increasingly digital, what prevents control from shifting from governments to machines? The digital money war. Money is no longer paper, it's a battlefield. In 2025, more than 130 countries were experimenting with their own central bank digital currencies, known as CBDCs. A global race in which powers that once competed for oil or weapons are now competing for algorithms and cryptography. The digital yuan in China is already moving transactions worth more than $250 billion. Europe is accelerating with the digital euro, while the United States is studying its own digital dollar. But take note, at the same time, artificial intelligence manages crypto assets that exceed $1.6 trillion. Two worlds in collision. The old guard of central banks against the relentless agility of AI. Clear example? While a central bank needs years to issue a digital currency with strict rules, a decentralized artificial intelligence can launch its own token in minutes, circulate it globally, and dynamically adjust it based on demand, as if money itself had a life. The numbers are brutal. In 2024, an autonomous investment algorithm generated annual returns of 12%, doubling what the best traditional funds offered. That same algorithm, without permits or regulators, moved more capital than entire regional banks in Latin America. The war is on. On one side, governments seeking stability and control. On the other, artificial intelligences seeking efficiency and expansion. Which one holds more weight for the common citizen? The security of a state currency? Or the freedom of an autonomous system that responds only to mathematical logic? The answer is not simple. Because what's at stake is not just the value of money, but the power to decide over it. And here, the great paradox arises. If central banks are guardians of order, and AI represents speed and change, What will happen when both worlds merge? The inevitable marriage. The confrontation cannot last forever. If history teaches us anything, it's that when the force of innovation clashes with the power of institutions, the result is usually a pact. That is already happening. In 2026, the Bank of England announced a hybrid system. Monetary decisions supported by artificial intelligence that analyzes 60 years of economic data in less than 10 minutes. The European Central Bank is testing prediction models based on neural networks to decide interest rates. Even the Federal Reserve admits that AI will be key to designing monetary policy for the next decade. Think of the magnitude. Whereas before, it took weeks of reports, debates, and projections. Now, a model can process 200 million simultaneous variables and offer recommendations with error margins of less than 3%. It's like going from navigating with a compass to flying with an interplanetary GPS. But the marriage won't be perfect. The question is not just how much AI helps, but who programs it. What happens if the algorithm that decides the value of the dollar was designed by a private company in Silicon Valley? Or if the software that regulates the digital yuan is influenced by geopolitical interests? Examples already exist. In Singapore, the monetary authority uses AI to adjust the supply of its currency in real time. In Nigeria, its digital naira relies on machine learning systems to monitor fraud and detect anomalies. And on Wall Street, private firms already sell algorithms to central banks as if they were precision monetary weapons. This inevitable marriage poses a new map. Central banks with human faces, but digital brains. Governments that still dictate the rules, but where artificial intelligence is the one pressing the buttons. The future of money in the hands of AI 2030 no longer seems like a distant future. It is the finish line that everyone is racing to reach. Governments, banks, corporations, and now, artificial intelligences. The question is no longer whether AI will have a role in the economy, but how much control we will give it over money itself. Today, 92% of the money we use on the planet is already digital. In 2030, that figure will be practically 100%. Cash will be a memory, a relic stored in drawers like old collection bills. In its place, there will be an ecosystem where every transaction leaves a digital footprint, where every movement is traceable in real time. And that's where AI doesn't just enter, it becomes the protagonist. Imagine this: algorithms that adjust the value of your currency as you buy a coffee, correcting inflation instantly. Systems that redistribute liquidity in milliseconds to prevent global financial crises. Networks that don't sleep, don't fail, and don't feel fear. Compared to that, human bureaucracy seems to move in slow motion. But be careful. Efficiency does not always mean freedom. An AI capable of controlling the economy can also define the limits of what we can do with our own money. If today a central bank decides how much to print, tomorrow an algorithm may decide if your transaction is approved, if your credit is adjusted, or even if your money loses value in real time. An absolute power, disguised as technological neutrality. The numbers are both chilling and fascinating. According to estimates by the consultancy McKinsey, financial automation with AI could add $1.3 trillion to the global GDP each year. But at the same time, more than 300 million jobs related to traditional banking would be at risk. Efficiency or exclusion? Progress or inequality? Current examples already show us the way. In Sweden, the digital e-krona could replace cash in just 5 years. In Nigeria, the naira seeks to integrate millions of unbanked citizens. In China, the digital yuan is being tested in entire cities with millions of users who no longer use bills. And in parallel, autonomous artificial intelligences manage cryptocurrencies, tokens, and smart contracts without asking permission from any government. We are facing a historical paradox. Central banks seek control, while AI promises freedom. But that freedom depends on the code that someone wrote. Who will have the real power? The governors of the central banks? The programmers who design the algorithms? Or the machines themselves, which evolve faster than their creators anticipate? Money has always been power. From the first coins in Mesopotamia to bills backed by gold, the control of money defined empires and brought down civilizations. But now we are facing an unprecedented leap. Money as an algorithm, as a living intelligence, as a network that beats in every transaction. In 2030, we may look back and think, how was it possible that the value of the world depended on human meetings in closed rooms? Or maybe we'll ask the opposite. How did we allow machines to decide for us what our effort was worth? The only thing that is certain is this. The future of money will not be decided in marble offices or in stock exchanges full of shouting. It will be decided on servers, in neural networks, in algorithms that process more information in 1 second than all of humanity can comprehend in a lifetime. The great question that hangs in the air is powerful and simple. When 2030 arrives, will your money be governed by central banks or by artificial intelligence? The answer is not yet written, but one thing is for sure. The future of money will no longer be human.